Okay, I call to order the 10th meeting of the Standing Committee on Finance. Our orders today are Bill C9, an act to implement certain provisions of the budget tabled in Parliament on March 4th, 2010, and other measures. We have with us a number of witnesses from the Department of Finance and other departments to answer any questions that members may have on any parts of Bill C9. Colleagues, what I'm proposing we do here is we will just go through part by part, and I will ask if any colleagues have any questions related to the part, and then those officials who deal with that certain section will then come to the table and answer any questions we may have. We do have, we've started the meeting obviously late. There is another committee here at 1 p.m., so we cannot go past that time. So obviously we'll try to proceed as quickly as possible. Okay, so we have Part 1 with respect to amendments to the Income Tax Act and related acts and regulations. Do any members have any questions related to that part? Mr. McKay.
With respect to modifies the definition of taxable Canadian property to exclude non-core taxable Canadian properties. Can someone give me the quick and dirty of what that means?
Certainly. The historically taxable Canadian property has included items such as real property located in Canada, timber limits, resource properties in Canada. It has also included things like shares of private companies, so a privately owned corporation, shares of that would be considered to be taxable Canadian property, and that gives rise to a number of, or gave rise to a number of administrative issues for non-residents selling taxable Canadian property, even where they weren't subject to Canadian taxation because, for example, they had protection under a bilateral tax treaty. The change that is being made is to narrow the definition of taxable Canadian property so that it will be applicable only in respect of real property, timber limits, resource property, and shares of corporations that derive their value from that type of property.
Can you give me an example of what that means in the real world?
In the real world, let's say, for example, that a U.S. multinational has a Canadian subsidiary and it seeks to sell that subsidiary to a purchaser. In the past, those shares would have been, or prior to this change, those shares would have been taxable Canadian property. The U.S. multinational likely would not have been taxable on that sale because it would have been protected from Canadian tax under the treaty with the U.S., but it still would have been required to go to Revenue Canada to get a clearance certificate in advance of the sale of those shares. So one of the effects of this change is that that compliance will no longer be required.
Is there any reciprocity we get for this change?
The Americans are already in that kind of a position, and most of our treaty partners are in that sort of a position. So really what we're doing is catching up with many other countries.
Okay, thank you. Can I carry on in this section, or you got?
I have Mr. Pacchetti, but
well, let me carry on because I got a few other questions.
Oh, it's on this one.
Oh, it's on this one.
Yeah,
okay.
it's on this one. Just how about a non-resident that holds shares in a Canadian-held company on the stock market? Would it be pertinent to that?
Likely not. Historically, shares of publicly traded companies were not taxable Canadian property. The exception was a circumstance where the non-resident held 25% or more of the shares of a class of that company. But typically, for the retail level investor, for most investors in publicly listed shares, they were not taxable Canadian property even before these changes.
And how about real estate?
Real estate is taxable Canadian property, will continue to be taxable Canadian property.
Okay. And private Canadian companies, you were saying if it's just a small business, is that going to be relevant?
It'll be relevant. It'll be relevant for most small businesses because the vast majority, the shares of those companies would be taxable Canadian property under the current rules and will not be under the new rules. The exception is where the company derives its value principally from real property or has done so within the previous 60 months.
Okay, great. Thank you.
Okay, Mr. McKay.
On the point immediately above that, you're changing the interest rate so that it's on overdue monies to the yield of 3-month Government of Canada Treasury bills. I'm a little lost as to the equivalency if the corporation owes the government money versus the government owing the corporation money. Can you tell me what's the rates that apply, and is there a differential in the rates?
There is a differential on the rates, yes. The differential, there has been a differential in the past. That differential will now be greater. It was 2% prior to this change. It'll be a 4% difference now.
So, if the corporation owes the government money versus the government owing the corporation money, we're actually exaggerating the difference between the two?
Yes.
Money is money?
Yes, some would argue that the risk profile of the two debtors is different.
Doesn't strike one as kind of the basis for fairness.
As I say, different arguments can be made, including the argument has been made that the risk profile is different between the different debtors, between the government and if for example, the corporation were to go out and borrow in the public markets, it would pay a higher rate than would the government.
I suppose. I'm not quite sure that's the analogy you would necessarily draw. What about if you analogize to the personal rates? If I owe the government money versus the government owes me money?
Then there would be a 2% difference.
There's a 2% difference. So it's either a 2% or a 4% difference that's a result in favor of the government. Okay. Again, seems to me you're getting into some interesting issues here as to if I owe the government money, I'm only get a 2% premium, if you will. If my corporation owes the government money, it's a 4% premium.
Correct.
So if I'm practicing law without incorporating, it's 2%. If I'm practicing law with incorporating, it's 4%.
That's correct, although I suspect in those circumstances the taxpayer can control where the debt or where the unpaid tax is.
All right. I've sat in this committee for a long time, but I haven't heard anybody come before this committee and say, this is what we have to do here.
We have a problem with 2%. Now it's become 4%.
Yeah, okay. That's an interesting point. Well, can I move on to another point? I didn't realize that from your briefing. No.
Well, Mr. Pichetti, you have a question on this point?
Yes, particular. So the example would be if I'm a corporation, I owe $100,000 on my income tax, but I'm waiting for $100,000 from my GST, and you have taken your time in refunding me from my refund for the GST. That would mean after a year I would owe the government, even though it's a net on my balance sheet, I would owe the government $2,000. Is that correct?
Well, before getting into that, there's some history behind this that I think would inform the committee. The Auditor General had taken a look at a situation where it was...
I'm not so sure she pays income taxes, but anyway.
Well, I don't know if she does or not, but what the issue was large corporations having money on deposit with the Canada Revenue Agency,
yes,
and obtaining interest on that, accruing, that the government has to pay at the Treasury bill rate plus 2%. Now, that means that for those monies, the Government of Canada would be paying more
sorry,
for
Mr.
those
Malone.
funds than would
sorry,
be paid.
I read the report. You know, you choose to make an adjustment for that. I mean, there's other things that we can also make adjustments for the Auditor General. I'm not so sure there's millions of businesses that plan their financing around sending extra money to CRA, and then when they need it, they can just ask for a check overnight. So if there's a couple of companies that were doing it, good for them, and I think that the Auditor General got a little bit of press for that, but I'm not sure I know of too many companies that can rely on that kind of financing. My problem is that the inefficiency is in the way that CRA works. I don't see how you can just not offset, because, like I said, it's not uncommon for CRA to send a refund with many delays, and meanwhile trying to collect overnight, and it could easily add up to a 2% difference over a period of time, especially since the taxpayer is not the one that controls when CRA is the one issuing the refunds.
Well, within the
Yeah, go ahead.
within the different types of taxes that apply, the tax law does apply a concept known as contra interest, so that if you overpay and underpay, the interest charges and overages can be offset, and they're offset on an even basis, so there's no differential there. Now, I think you're probably right that most corporations don't plan on leaving money on the table with the Canada Revenue Agency, and that is appropriate, and explains part of this, the impetus behind this measure. Most companies don't do that for obvious reasons.
But
now,
someday.
most companies, if you go out and you're looking for a place to place surplus funds, you can place it with a financial institution, in which case you would get a lower rate of interest than you would by placing it with the Canada Revenue Agency, and that's considered inappropriate. In the contrary, if a corporation goes out and borrows, they will pay a higher interest rate borrowing than they will when they place their funds. That's sort of normal business realities, and those business realities apply also with the CRA, and with the amounts that they pay, with the tax law requires that they pay and charge in respect of overages and underages of tax payable.
Okay.
Thank you.
Mr. McKay, you have further questions?
It does stretch one's notions of basic fairness here. Little did I know that you could actually invest with Canada Revenue Agency and make more money than you would at the bank. That's a pretty interesting idea. Anyway, moving on. The surplus issue with respect to pensions and things of that nature. Obviously, you're addressing a real issue here. I think it's quite significant. So, are you moving the effect of these measures, as I would understand them, is that effectively you move the surplus up to 25%. So I could, on a defined benefit plan, I could carry 125% of my liabilities from 110%. Is that correct? I understand that.
That is correct, yes.
Okay. Okay, that's all the questions I have on that section.
Okay. D'autres questions?
Other questions? Yes. Mr. Payet? With regard to interest rates, so you charge a standard rate to any citizen or corporation who owes money to the CRA. You have the same rate. The 3-month bond rate plus 2 or 4%. That's correct? So there's no distinction between credit ratings among corporations. Because you said that this was based on the risk involved. There are different levels of risk. And understand that a federal debt, that when the government owes us money, that it is presumed that it has a AAA credit rating, and that it is normal that the interest rate is lower than if we owe money to the CRA. That's the logic behind this.
There's no distinction made amongst taxpayers. It'd be a little difficult for Canada Revenue Agency to try to do that.
Mais pour les entreprises.
For corporations, would it be feasible to do so? And would it be feasible that some can make investments, as my Liberal colleagues indicated, which is quite an interesting thought, to invest with the CRA. But could we imagine that without any credit on their books, and we see this, that corporations might decide not to pay or to delay payments to the CRA, given that the interest rate is the same for any corporation?
Measure deals not so much with corporations that don't pay tax to the CRA. They will pay interest on their underpaid taxes at the Treasury bill rate plus 4%, as would any individual. This measure deals with overpayments of tax, effectively leaving monies on deposit with the Canada Revenue Agency, and part of this policy recognizes that the Canada Revenue Agency is not a deposit-taking institution. It is an institution that collects tax. Interest is paid on tax overpayments, and that's fair. But when you determine at what rate the interest should be paid, there's a good question as to whether it should be paid at the Treasury bill rate plus 2%, which is what it was before for corporations, or the Treasury bill rate plus 4. Previous to that, it was Treasury bill rate plus 2% for all taxpayers. Now, for individuals, it stays at Treasury bill rate plus 2, but for corporations, it's what the corporation would get had it invested straight up in a Treasury bill.
C'est ce qu'on indique par rapport à...
That's my understanding with regard to our earlier discussion. However, is there, for people who receive interest and those who pay interest, are taxes still paid on that? That is, those that receive interest from the CRA have to pay taxes on the following year on that interest. And if you have to pay interest to the government, is that interest deductible the following year?
Is taxable in the same way as if you would receive interest from any other source. Interest that you pay depends on whether you've laid out funds for the purpose of earning income or not. And paying a shortfall in your income taxes and incurring interest expense on that is not considered money borrowed for the purposes of earning income. It's a tax liability, and that's after you've determined your income. So the upside of it is it's not deductible.
Donc, si je comprends bien...
If I understand correctly, interest paid by the Government of Canada, regardless to whom or for what reason, is taxable in the year, but interest that was paid by individuals, entrepreneurs, or corporations cannot be deducted from their income. So that seems to be a certain unfairness there. So you can deduct interest on income. You can deduct interest for an investment that you make if it makes a return, but for losses are deductible on eventual future income or on taxes already paid. But what you're saying is that any interest paid by the Government of Canada is recovered in a certain way by future taxes, but interest paid to the Government of Canada, a good part of it at least, is not deductible for taxes to be paid to the government at a later date. That's my understanding.
And it's consistent with the basic principles that money borrowed for the purposes of earning income is deductible. Interest on money borrowed for the purpose of earning income is deductible, and other types of interest are not. So, for example, if you had an individual who earned interest from a deposit in a deposit-taking institution, and at the same time paid interest on, say, a car loan for a personal car, the interest on the car loan would not be deductible. The interest on the monies placed with the deposit-taking institution would be taxable. And the same principles apply in the case of interest paid and received from the Canada Revenue Agency.
OK. J'aurais une seule autre question.
I have another question, because I don't think we'll make it through this entire bill. But you also deal with the sections 30, 31 with registered education savings. I'm trying to understand, even for a fiscal expert like myself, and for having brought amendments forward of this nature, I'm trying to understand or get a summary of the changes proposed to the RESP plan, and why these changes were brought forward. Are these only harmonization amendments, or are these amendments of another nature?
The positions that have been applied by all the interested parties, the federal government and the provinces, for several years, that contributions to these plans from provincial sources, while they're valid and appropriate contributions to the plans, should not attract matching amounts from the federal government, nor should they take up contribution space on the part of contributors to the plans.
OK. Ça va.
Mr. McCallum, please.
Thank you. My question relates to point number E, about people who have retired and are resident in Canada and receiving U.S. Social Security benefits. And I think you'd agree a general principle of taxation is people in similar circumstances should be taxed similarly. So my question is, if you have two people, two neighbors in a border town like, say, Windsor, each receiving, one receives Social Security from the U.S., one receives Canada Pension Plan, which one is better off, or are they equally well off, tax-wise?
Without knowing all of the details, it's hard to say, but it would seem that the one receiving the amounts from the U.S., at least on the Social Security amounts, will be taxed at a lesser rate in Canada. The change that is being proposed here is simply reinstating the position that had been agreed to and was reflected in the Canada-U.S. tax treaty prior to 1996, and putting people that were in that position prior to 1996 back in the position they were in at that time.
Well, if the prior position was unfair, why would it be a good policy to revert to what was unfair if those receiving U.S. Social Security are now better off than those receiving Canada Pension Plan? I
suspect the person, the former American resident receiving the amounts, might argue that that not being in the same position that he or she was in back in 1995 is unfair to them. And it's for that reason that this change is very targeted. It's only available to those who were in that position in 1995 and have been continuously resident in Canada and in receipt of these amounts since 1995.
Okay. One last question for me, and that is to do with the pension surplus now being allowed to be 25%. I don't object to that. It seems the horse has already left the barn, in the sense that that might have had an impact when pensions were in good shape, but 125% may not do much when the average pension might be around 85%. But I seem to remember I think it was the actuaries had a proposal that in excess, companies could make contributions in excess of 100% into some special vehicle, which would, and they would then be the clear owners and that might have had a more powerful incentive effect for companies to do that. Do you know what I'm talking about and whether that proposal was considered?
Well, this measure is strictly a tax measure. What you're referring to is something that would be dealt with under the PBSA, the Public Pension Benefit Standards Act. Thank you very much. We haven't tried to wade into that with this particular measure. As you do know, there is a pension consultation process that's underway right now. What this measure does is strictly to deal with the issue that perhaps 110% was not sufficient to overcome sort of unexpected downturns in the market. Your question about timing of it, very good question. But what this does is ensure that should that situation ever happen again, the pensions will be able to be funded at least to 125%, and if you get a downturn similar to what we've had recently, and let's hope that doesn't happen again, there will be that 25% cushion there. It doesn't attempt to deal with the ownership issue. That's a much broader issue.
Okay, thank you.
Okay, thank you. No further questions on this part. We'll go to part 2 then. Amendments in respect of excise duties and sales and excise taxes. I have Mr. Wallace to start.
Thank you, Mr. Chair, and thank you for all our guests at the table and in the audience here helping us out understanding this legislation. The issue that I'd like to be clear on is on the tobacco labeling, I guess you would call it, or new stamping that we're proposing in this. We're hearing from a lot of our colleagues. It's not too far from my area either. The issue of contraband tobacco products, and I need to understand what this legislation is actually doing in terms of stamping. I'm assuming it's helping in terms of countering that activity. What is your expectations based on the legislation? And why can't we do it through regulation? Why do we have to have legislation for it?
Sure, I'll respond to that question. What is being proposed here is a new regime for the stamping of tobacco products. Currently, right now, if you look familiar, I'm not a smoker, but if you look at a tobacco package, there is a ribbon that goes around it and some words that are required to say Canada duty paid. These are intended to provide a sign that these are legitimate products and these are taxable, all taxes have been paid. The problem is that these products have now become counterfeited. There are offshore manufacturers who are so sophisticated they can reproduce the product and it'll look identical to a product that is legitimate. So what we are intending to do with this new regime is put in place a new mechanism for that stamp. The CRA will now be, the government itself will be issuing and it has developed a new stamp. It will be responsible for the production, the distribution, and then also there will be specific possession requirements and limits on this new stamp. It's a new sophisticated stamp with both overt and covert security features, so it'll be an additional tool for enforcement officials to help identify the counterfeit product from the legitimate product.
And we had to have legislation to do this, not through regulation?
Regulations right now, it's a regulatory regime right now, and that regulatory regime just specifies the color of that ribbon and the wording. What we're producing now and what we're proposing is a new specific controls, and that controls will entail that that stamp itself will be under the control of the Minister of National Revenue. So there's legislative requirements there, and there will be a requirement on who can possess it, and there are related and complementary penalties and offenses for for non-legal possessions and non-uses of that particular stamp. So that requires legislative amendments.
Is there any flexibility on packaging? Because cigarettes are basically packaged very similar, I think. I'm not a smoker either. And now that we have, in Ontario at least, all those things up, you don't even see them in the stores. But there are other tobacco products, pipe tobacco, cigar boxes, that kind of thing. Is the stamp flexible enough that it's able to be used on all kinds of products, or are we having some issues with that?
intent is that this particular stamp will be applied to all tobacco products over time. The primary target initially is the cigarette packages themselves, but the intent is to have this stamp applied to all manufactured smokeless, the roll your own, the tobacco sticks, all those products.
My final question on this area is, let's assume the budget passes and we're not into an election. What is the time frame that you hope to have this implemented in, and are you giving manufacturers some sort of notice of what the change and how much time they have to comply?
There is a specific transitional rule in these provisions. So the intent is that once this legislation is passed, there is a bit of a delay, and that provides time for new regulations because there are complementary regulations that will be needed for this particular new regime. So that provides some time for the CRA to announce those and to distribute and get those regulations passed. And then the intent is to provide till April 2011 for the full implementation of this new stamping regime. So it provides a transitional period.
Those are my questions on that item. Thank you.
Okay, thank you, Mr. Wallace. I have Mr. Martin and then Mr. Carrier.
Oh, thank you. Not being a regular member of the committee, I'm just taken by what a vast document this is and how complicated it is. I assume it's going to take many, many meetings to plow your way through the various parts. And I certainly hope it's not going to be in any rush or any hurry, because
I'm ready to vote right now, Pat.
Yeah, I can imagine you are. I didn't realize we were limiting ourselves to parts 1, 2, and 3. I did want to talk, being Earth Day, I wanted to talk about sections 18, 19, and 20, and I hope maybe I can come back and sub when that, when we finally get there, which may be months from now, I presume. Well, at the rate we're going. The question I will have in the relevant section we're talking about, though, is dealing with the goods and services tax as it might pertain to financial services. This has been in the news a little bit lately, and I don't pretend to know a lot about it, but I mean, just as a layperson, could you tell us, will the enactment of Part 2 result in the application of GST, HST to any previously exempt services?
I'm going to answer that question. Basically, I'll make a little background for the answer. Basically, the general rule under the GST is that every supply made in the course of commercial activity is taxable unless it's specifically exempt or zero-rated. Okay? Financial services are part of the service that are treated as exempt. And the exemption should be, it was at the state before, there were a series of court cases that basically broadened that exemption. On December 14, 2009, the minister issued a news release where they basically, the goal was to address the court case that were broadening the exemption in the tax base at that point. Following that, there has been a release by CRA trying to explain the change, but only based on what was released at that time, which was a backgrounder. In March, when the budget was tabled at the end in the Annex 5, was the notice of ways in motion, there was the text of the proposed amendment. It's true that there's been a lot of comments on basically the amendments, but following this, the tabling of the proposed amendment that is included in this bill, the Canada Revenue Agency has basically posted something on their memo that they issued, saying that based on the wording that was released in the budget, they were going to review their policy, and they're going to consult with anyone who basically wants to share their view with CRA on what should be addressed by those amendments. Furthermore, the Minister of Finance on March 26, he issued a news release again to basically to confirm that the policy intent was just to bring back the exemption to the point it was before there was those court cases that expanded the tax base. So the policy intent is that the tax base be the tax base that was before those court cases expanded that base of exemption. So we want to go back to the situation that existed before those court cases increase the exemption and basically reduce the base.
And will this result in a lot more revenue for the government? I mean,
The goal here is not to increase revenue to the government, it's to protect the existing tax base that was before those court cases.
And can I ask on the same, in the same line, I mean, just how would that affect the ordinary Canadian? I mean, never mind high finance, but I mean, like, why are there exemptions for financial services? I presume things like tax consulting, etc. Are those exempt? If a corporation hires a consulting company to give them advice on tax avoidance, is that tax exempt?
Consulting in itself is not a financial service usually, because you can consult on all sorts of things, and you talk about tax advice here. This is not a financial service. The financial service, you have to see that it needs somewhere to be linked to a financial instrument. You know, it needs to be linked to the issuance of a financial instrument.
Could you give me an example?
Well, an insurance policy, you know, the issuance of a bond, the issuance of any instrument that are there to provide financing in some sort.
What if you hire somebody to do your taxes?
My understanding is that is taxable.
That's taxable?
That's taxable. That's my understanding. But
okay, I don't pretend to understand, but the reasoning here. So there's no net benefit. The government's not going to, this isn't a tax grab. The government's not going to get more money as a result of this initiative. More revenue for the government.
The amendment was intended to protect the tax base that existed before those court cases broadened the exemption, basically.
Which resulted in less money.
Yes.
Broadening the exemption resulted in less revenue for the government.
Yes.
So this will result in more revenue for the government. So it's a tax increase.
Well, it's not a tax increase because it protects a tax decrease. It protects from a tax decrease.
It might be splitting hairs a little bit, but how does this work, Mr. Chair? Do you just keep asking until I'm finished asking questions on part two, or is it someone else's turn?
Well, we have Mr. Carrier, Mr. Paye, and we have Mr. Wallace, so we can come back to you.
I'll come back if I have. Thank you.
Mr. Carrier.
Merci.
Thank you. I would like to come back to the excise stamp, which you talked about earlier. I'm pleased to see that the government is acting in that regard to try to reduce contraband tobacco, which is a real problem. But I do hope that the system is more effective. I was reading in the documents handed to us that National Revenue will issue those excise stamps. There's also a provision whereby the minister can authorize a producer of those stamps to provide stamps to people who are entitled to them. So is there not a loss of control there with regard to the use of those excise stamps? If the minister can authorize stamp producers to do so, is that sufficient control if we want the system to be more effective? In fact, wouldn't it be better that it only be the Minister of Revenue who issue those stamps?
These particular stamps, he's going out to a specific specialized printer, and the printer in this case is one of these specialized printers who also deals with the currency. So he is a very sophisticated and very directed, targeted sort of printer. He'll produce these stamps themselves will look very much like something you would see on some currency, those sort of measures. It's a very sophisticated stamp, and the minister has entered into a contract with this particular stamp provider. It is a sole source contract. There is only one person one particular company that will be producing those stamps. And the process that's envisioned here is that the request will be made to the minister himself by the industry for these stamps. It'll be the minister who goes through, receives, reviews this particular request. And again, the request for stamps can only be made, and stamps can only be issued to those people who are licensed, who are legitimate or prescribed, authorized under the Act to receive them. So that request will be directly made to the minister. The minister will approve them, and then he will I send an order to that provider, and that provider will then distribute those stamps directly to that particular licensed producer or manufacturer.
Okay. Ça va.
also, as I mentioned earlier, there's controls in terms of who can possess that particular stamp. And there are penalties and offenses for illegitimate possession of this particular stamp. So it will very much be a new controlled product. And there are significant penalties in here for improper possession.
Okay, merci.
Okay, merci. Monsieur Paet.
Thank you. Mr. Payet, please. There's some difficulty in understanding the subtleties with regard to financial institutions as to know whether you provide financial service or not. In the same room yesterday afternoon, Mr. Martin gave a good presentation or good remarks concerning someone who knew to what extent he was providing or not particular services. I would like to take the definition of asset management. Now, when I have my taxes done by an accountant, I have to pay GST, TVQ, harmonized sales tax. But sometimes there are subtleties there. An accountant is an accountant. There's an order of accountants, and physicians have their own orders. Now, with regard to asset management, for instance, when Vincent Lacroix was doing business, I see you raise your eyebrow. I presume that his services were billed and tax was paid on them, since he was a recognized financial consultant and that he was legitimate. When Earl Jones was doing business in his basement at home, did he have to pay tax on the services that, in principle, he had to pay? So how far can we go with regard to the definition of these types of services and the various subtleties? Well, I'm not in a position to comment on the two situations that you raise. No, it's just an example. What I can say is that financial services are complex. There are financial services and there are related services of a more administrative nature. There is a rule in the Excise Tax Act which still exists to the effect that since it's a tax on a transaction, you always have to look at the service that's provided in that transaction. And there's a rule that states that if more than 50% of the value of the elements of that transaction, if they were provided individually, well, all of those services become financial services and are exempt. I have no idea exactly what those two financial advisors were doing. No, they weren't my financial advisors. Let me be clear about that. But it's always a question of fact. What exactly is provided? And that has to be looked at. But general comments, especially in financial services, well, that's something you have to be careful about. You really have to look at the details at what is provided. Well, what I was trying to get at is the difficulty in identifying the limits. And what you're saying is that you have a 50% threshold. We're not going to check whether they've billed for 4 or 4.5 hours. Or in some cases, it's 20%. It all depends on a number of factors. With regard to sales tax, I see that there are a number of elements here with regard to the HST, etc. Having benefited from your knowledge on bills concerning the HST in British Columbia and Ontario recently, would it be possible to know why this bill does not contain, or what we are waiting for to include in such a comprehensive package, the famous harmonized sales tax with the government of Quebec? Well, I'm not personally responsible for what's included in a bill. That's a decision taken by the minister. It's up to him, perhaps, that you should be asking that question. As he is not here, I have to ask it to you, unless Mr. Menzies, who is delaying our work here, could at least transmit that information to him. Of course, we could have been here at 11 if there had not been, but I have no other questions for the time being. Thank you.
Thank you, Mr. Chair. Just for clarification for Mr. Martin's and everyone's knowledge, I want to go back to C and the reaffirming the policy. I just want to be clear, and I do appreciate you coming to the pre-meeting that we had, and I know it was a little bit hard, and I apologize for that, but I did. I'd still be happy to have the answer, but you did a great job. I just want to tell you that, and that's what happens when you have it at 7 o'clock at night. So what happened was we had a policy on on the definition of financial services and how it was working. A organization or organizations decided that it was too ambiguous, or they thought there was a loophole. They took it to court. They won. What we're doing here is changing the wording back, or fixing the wording so that loophole does not exist in the future for those who are trying to find a way to get out of paying tax. Is that basically what's happening here?
I don't want to qualify as loophole, but I would say as uncertainties existed in the following those court decisions, right. And basically the goal of these amendments is basically to remove the uncertainty and bring the situation back to what it was before those court cases.
And the time frame between the court case and this, have a lot of financial institutions taken advantage of the uncertainty that the court have done in terms of not paying their tax? Or would you say they're mostly assuming that we're going to fix this little issue and are either paying or holding on to money knowing that they're going to have to pay this money eventually or in the future? Has there been a big uptake of this court case's decision?
Yes, there have been. What happened, it's important to understand that when you're a provider of a taxable service, you're entitled to input tax credit. If you're a provider of exempt service, you're usually not entitled to input tax credit.
Right.
So if the provider to you charges you tax because he argues that what he's doing is taxable based on the long-standing policy, well, the person who received the service, if he pays, he may not be entitled to recover it to input tax credit.
Right.
So if there's a court decision that go out and say, oh, basically this guy, he tried to say that this service is not taxable, basically the other guy next door, even if he paid tax on those transactions, he will try to argue the same thing.
Right.
And there's something in the legislation that is called a tax paid in error rebate, and basically you can try to claim back tax to argue that I've paid in error for the last 2 years. So what happened is that in a situation like this, if there's no fix, well, that affects the supplier and it affects the recipient in this case, because the way it affects the supplier is that he charged tax because he thought he would recover his input tax credit.
Right.
If the court suddenly say, oh, no, this is exempt, well, the recipient, which usually is a financial institution, gets we can even call a windfall of this, basically,
right.
of the decision. But it penalized the supplier because now all the input tax credit he claimed, he would have to give them back. So to ensure that basically there's not too much of that game playing going on, when the announcement was made, it says, well, these amendments are proposed to apply as of that date, which is December 14th. And to make sure that people don't claim all those tax paid in error, it also says that, well, if you paid tax on the transaction and you basically comply with the long-standing policy, well, this will also apply to you, so you cannot try to claim those tax paid in error.
Very good. Thank you very much.
Thank you, Mr. Wallace. We have Mr. Martin.
Well, I don't mean to harp on this, and I thank you for trying to bring as much clarity as you can to it. And I think I understand you, but I still don't know how much the government will realize by this. It's one of the advantages of being government that if the courts rule against CRA and say that you are applying the law incorrectly, you just change the law and keep doing what you wanted to do all along. But, I mean, had this Part 2 not come into this budget implementation bill, you would have had less revenue. But with this change, you will have more revenue. There must be an estimate as to what the net benefit to the government is of this particular measure of the Budget Implementation Act. Can you share that figure with us?
Yes, there was I was asked a question similar during the parliamentary briefing, and at that time I didn't have the question, so I kind of did my homework and asked basically the person responsible for that. And basically the revenue that the government tend to protect here are estimated at over $100 million a year.
So paltry amount of money then. But I think the room for abuse is still serious, though, and I just ask this, with all due respect to, I think one of the real shortcomings of our corporate governance regime is that we allow an auditor of a company would be providing a service that's probably exempt, but we allow that auditor to also give the tax advice to that same company, the very rules that he will in fact audit. There's no independence of auditors assured in our corporate regime. So where would be the crossover for that person selling financial services to that company if they're the auditor and the tax consultant advisor at the same time? And how could the CRA be satisfied that this tax expert is going to say, well, I've got this hat off now and put this hat on, taxable, not taxable, taxable, not taxable? It's a real problem.
First of all, I assume your auditor here is not an employee of the corporation you're talking about, because in that case, okay. So it's an accounting firm, like, is that your, well, accounting services are taxable. And an accountant is not issuing a financial instrument. An accountant is not going in the stock market to purchase a financial instrument for a client. It's just a accounting advice that he's giving.
So that's all taxable?
That's all taxable.
That's not considered an exempt, the auditing of your books?
No, one way maybe I can try to explain is that a financial instrument is something that has an element of risk in there. You put your money there and it's risky, a mortgage, someone lends money to someone and the person may pay or not pay. Well, the risk element there, it's kind of the pure financial link is the risk that is in the thing. An accountant who goes somewhere and looks at the books and does basically
I'm obviously misunderstanding what financial services are in the context of taxation. Thank you.
Thank you. Monsieur Carrier, encore?
Oui. Concernant...
Yes, regarding the two taxes or the harmonization of the two taxes, my colleague referred to it earlier. You know that since 1992, the government of Quebec collects GST for the Canada Revenue Agency and therefore administers both taxes, collect the tax and send the agency its share of the collection. How do you ensure that we're talking about amendments to the GST? How can you ensure that everything is properly controlled? That is, how Quebec collects taxes. Are things running smoothly there? Has a commitment been given by the Ministry of Finance to ensure that everything that's in legislation will be fully complied with? Do you ensure control there? And I was wondering whether you believe that things have been running smoothly since that time, or is the road a bit rocky with regard to the tax collection for the benefit of the CRA? I'm not sure I'm the best person to answer that. I work for the Finance Department, and which under the responsibility of the Minister, and the administration of taxes since 1992 is done by the CRA. The agreement with Quebec is, to my knowledge, an agreement between the Minister of Revenue of Canada, and this is a file on the responsibility of another department, and with the Ministry of Revenue in Quebec. So my understanding is that Revenue Quebec employees are mandated by the Revenue Agency in administrating the GST. The level of control and to how all that works, that's a question for CR8, because they actually monitor what Revenue Quebec does and could answer that with regard to day-to-day operations. I imagine the agreement must run reasonably well, but I can't give you any more detail. So the responsibility is transferred to the CRA with regard to ensuring compliance with Bill C9 and the amendments that are brought forward therein. It's the CRA which is responsible. And so you have no control over that. Well, of course, we look at the interpretations that are made. But if you ask me how long it takes to send a tax assessment to a Quebecer compared to another province, I don't have details about that. But you have to understand that being mandated by the agency, to my knowledge, the interpretations made by the Revenue Quebec Department with regard to those amendments, they have to follow the interpretations given by the Minister of Revenue or the CRA. Thank you.
We'll move to Part 3, amendments in respect of the air traveler security charge. And I have Monsieur Paillet, s'il vous plaît.
Oui, une très courte question, parce que j'aimerais ça qu'on...
It's a brief question because I would like to go to Part 4 and 6 thereafter. If the rights go from 490 to 740 something, or from 834 to 12 and 71, from 17 to 21, that means that you clearly will be incurring more revenue.
Donc, pour un même...
Therefore, for the same number of flights, there would be an increase in revenue.
Donc, c'est une augmentation.
Therefore, that's a tax increase done by this government, which says that it never wants to hike taxes. No comments. No comments.
Back to the funding of air travel security. The basic principle is that it's a benefit that is directly and principally for the air travelers, so therefore air travelers, as the principal beneficiary, should pay for the cost of enhanced air travel. There is going to be some significant increases in spending and in improvements to in enhancing the Canadians' air travel security system. There's been a number of events recently.
Mais est-ce que, puisque votre question, votre réponse m'invite...
But your answer leads me elsewhere. Are those increases, or do those increases and increased revenue go to a specific fund for security, right? But it also goes to consolidated revenue, basically.
It's the air travel security charge. The revenue is collected. It's collected by the carriers, and goes into the CRF, the Consolidated Revenue Fund.
C'est ça. Donc, on peut associer dollar pour dollar.
Therefore, dollar for dollar, and as we learned, a buck is a buck is a buck, and it goes all to the Consolidated Revenue Fund, and then the government can dip into that. So, well, if you do so, this is all virtual.
There's normal reporting in terms of how security is financed, where the revenues, and how the link between revenues from the ATSC and the security expenditures. It's normally reported. That's been reported in past budgets. It's been reported. There is an audit process by the Auditor General that reports on how those revenues are used and the link between the revenues and the expenditures.
Merci.
Thank you. Mr. Généreux, please. Thank you, and thank you to all our witnesses. I would like to follow up with Mr. Ashadina. So it's the principle of the user pays with regard to the increases of about 53%. So the users will pay. So these are travelers who will have to pay those increases.
Air travel security charge is levied on travelers, air travelers. It's collected by the carriers, and it is for those are the people who principally benefit. Those are the people who get the direct benefit from the enhanced travel. Therefore, the principle is that the air travelers pay for the cost of air travel security system.
Est-ce que vous avez soumis ces questions?
Have these issues been submitted to organizations or individuals in order to consult with them before imposing these increases?
Charge. There's been discussions, I believe, between Transport Canada and the security agencies regarding new security measures, what's required. A lot of the security measures are international in context. In order to fly into a foreign airport, they require some sort of clearing. There's some sort of agreements before they'll allow you in. So they require some sort of screening, some sort of level of screening before they'll allow. For example, after certain events, there is an increase in terms of the level of screening and expectations in terms of the screening that will be done on foreign flights going into some countries. So you have to provide that level of screening in order to enter into those other countries.
Est-ce que d'autres pays, justement, ont été obligés d'augmenter leurs frais?
Have other countries increased their air security charges? And if so, how much? And was that well received in those countries?
How well it was received? I know there is a proposal in place right now in the U.S. to increase the level of the charge there for security.
Est-ce que vous savez s'il y a d'autres pays aussi, par exemple?
If there are other countries, such as in the EU.
Changes. I know there are security fees. It's difficult to compare security fees in Canada, security charges versus elsewhere, because often they are lumped together with different sort of fees. There's a custom fee. It's all together in one. And so it's difficult really to compare. A lot of those are for the air travel security, for the air travel, the system in terms of all these other things, clearances, those are all sometimes packaged together as one fee in other countries, so it's difficult to really to compare. It's not apples to apples, it's apples and oranges.
Merci.
Okay.
Thank you. Thank you.
Eddie, please.
Thank you, Mr. Chair. Just quickly, has there been, I know this is a new tax, so it's a projection, but has there been any projection as to what the cost will be? Because a tax is a tax, and we never seem to see taxes go down. So is this going to be temporary, or has there been a budget made up to make sure that we're going to be spending this revenue for security? What's happened in the past if we were to compare revenues versus expenses for air security charges?
The announcement that was made on February 25th basically indicated that there would be additional $1.5 billion provided for enhancing the air traffic security system. The commitment is that these new revenues that will be derived from the increase in the charge will roughly offset that amount over 5 years.
Okay, so there should be no profit made.
The intent is that there should be no. It's to be in line.
What's happened in the past? Because there is an amount right now being charged.
I believe if you look at the budget of 2009 or 2008, 2009, it was indicated that cumulative revenues and expenses for the air traffic security system were roughly offset. So up to that point in time, it was roughly equal. It was in balance.
Thank you.
Okay. Mr. Martin, please.
Well, much of what I was going to ask about this has been answered, but I think it's worth noting that, your point that this is a principle that the user, the beneficiary of this particular service should pay for this service. That's getting to be a real hallmark, a trend of the government, is if you're cutting taxes here, you're raising service fees on the other hand, and ultimately you're still paying more. But this can't be viewed as a dedicated tax, because it still goes into general revenue. It still goes into the same pool. You say there's an accounting at the end. The Auditor General may find that the amount submitted was roughly the amount spent on that service, but there's no obligation. The government can spend that money on whatever they wanted, really. And that's what concerns Canadians, I think, is that a 52% increase is actually massive, even if it's a relatively small amount of money. Is this strictly to pay for the new body scan machines, or was this service operating at a loss already? And if so, how much? In other words, were we breaking even prior to Mr. Baird announcing the new body scan machines?
I think there was some decision now that there would be a significant increase in the level of security. There was new requirements throughout the world internationally, and there was new, and if you look at CATSA, those people who were responsible for determining the level of security, what is appropriate, they had identified significant new needs. There was also some capital that's going to be replaced.
Not just the body scan machines, then.
There is significant, there is going to be additional enhancements. The body enhancements are just one measure. I mean, the body scanners are just one measure.
Body enhancements.
I'm just wondering, if we must know how we compare with other countries. I mean, even if you say it's complicated, I mean, in the interest of openness and, you know, transparency, somebody must have done a breakdown that the United States charges, I don't know, $3.50 per ticket or $7 per ticket. Somebody must have stripped away all the confusing other things that are lumped in there so that we have some idea where we stand in that field. Do you have that answer?
In terms of the U.S., I can tell you it's difficult to compare. They have at least, I guess it's 3 different sets of fees and taxes on airline tickets, including a passenger security fee. So it's really difficult to...
How much is that?
The U.S. budget, and I'll follow up in just saying that the U.S. budget proposed to more than double its current security fees.
What's the
from
current?
$250 right now per segment to $550 per segment, up to a maximum of $11 for a one-way trip by 2014.
And how will ours compare to that?
It's a different, because in the U.S. it's a per segment, so it depends on how many legs of a travel it takes for you to get to your destination.
But there's got to be a way to compare it. I mean, surely.
It'll all be based upon, is it an equal sort of, is it a no connection? Because in the U.S. it's, as I mentioned, it's a segment, so your connections, you're paying separate fees.
Let's say it's one segment. Let's say it's Winnipeg
If it's
to
based
Toronto.
on, it'll be $550 per segment for a domestic travel, and
For
in
us.
Canada, the rate will be, I'm looking for, that's a one-way travel.
Yeah.
So let me get my current rates. For one-way travel, $7.48. Thank you. I'm looking for that.
So we're 50% higher than the United States.
Yeah, $7.48 for one-way travel, $14.96 for round-trip travel.
Not quite 50% higher. I wonder why. What a cash grab that is. Boy, oh boy, oh boy.
Thank you, Mr. Martin. I've got Mr. Wallace and then Mr. McCallum.
Thank you. I just want to clarify a number of things. I'm sure it's difficult to compare based on volumes and everything else. So the scanner, if you put 1,000 people through or 500 people through, the scanner's capital costs is exactly the same, but the amount of revenue you can generate to make that happen is different. I'm sure it's basic economics that eventually Mr. Martin will figure out. But if he comes to these meetings on occasion, I'll help him out as best I can. But my point is this. You indicated that the money goes into general revenues, which is fine. But every year we get the blue books, the estimates, the actual spending that's done. Would a member of Parliament be able to find in the blue books, whether it is the mains or subs A, B, or C, if there were, where would they be able to find, such as myself, where the actual expenditure is allocated? Will we be able to find that in the blue book where we're spending money on CATSA or on airport security?
CATSA is the dedicated agency responsible for air travel security in Canada.
Right.
What they do is all dedicated towards the air travel security system. They are the ones who largely administer. It's the employees, the screeners that you run into every time you go, they are employees of CATSA. They report, they have an annual report, and they report their expenditures each year.
Right. And so does their expenditures reporting into the Government of Canada, Are they reflected in the estimates that we see every year?
I think they would report under Transport Canada.
In the Transport Canada. So if I look under the Transport Canada area, I can find how much we're spending.
Correct.
With a little work, likely, on airport security and CATSA in a year. Is that correct?
You would largely, CATSA really's mandate is only airport security, the air travel security system, so all of their expenditures would be related to that air travel, the functioning of the national air travel security system.
And then this fee is to...
There are some additional programs. There's a RCMP Air Marshals, and there's some other things done in Transport Canada that are also funded by the air travel security charge.
So I just want to clarify one thing you said. You said this user fee will cover the cost over 5 years.
Correct.
So are you saying to me that if I'm looking through the Blue Books, I can find an upfront cost or expenditures for increased security for people flying in this country immediately or really soon, and this fee over time will be enough to pay that, offset those costs? Is that correct?
I think what you'll be able to see is that there's been a significant increase in CATSA's expenditures.
Yep.
And that will relate also to that'll correspond to the increase in the air traffic security charge rate. It won't be one-to-one. You can appreciate it's over 5 years. So, and there will be some years where spending may be higher or lower than other years. There's capital equipment acquisition. There's different.
But at the end of the 5 years, it should virtually balance out.
The intent is that the increased revenues will basically balance and be in line with the increased expenditures.
And this is only a charge, if I understand you correctly, that the airlines pay based on the number of tickets they sell for security for people who are actually using the service. So it is really a user fee at the end of the day.
It is a user charge. The air travelers are the ones who pay for it. It's paid at the time you purchase your air travel ticket, and it's for that. It's in order to pay for the security that you will receive when you go to the airport and for the benefits you will receive from flying safely.
Thank you, sir.
Okay, thank you, Mr. Wallace. I have Mr. McCallum, Mr. Martin, and Mr. Paet. I'd like to try to finish this round by 1 o'clock. So we'll go Mr. McCallum, please.
Just one brief question. You said that the revenues and the expenditures were roughly in balance over the past years. Well, I wonder what is the definition of roughly? Were the revenues higher or lower than the expenditures? And in dollar terms, approximately, what was the gap?
The air traffic security charge was introduced in 2002, and I think if you look at the budget of 2008-2009, it basically reported at that point in time that on a cumulative basis, revenues and expenses were roughly in balance. What does that mean? I think you had the billions of dollars of expenditures of that period and the $1 billion of revenues, because this was over a 6-7 year period, 8 years, I guess, at that point in time, 7 years. So at that point in time, you would have been, I'm not sure, I don't have the exact dollar figure in terms of what you would have been, maybe a little above, a little below, but you would have been roughly in balance.
Okay, so if the number's $1 billion, it would have been just
marginal. Depends on what you think, but relative to the billions expended and the billions received, it would have been relatively small.
Okay. All right. Thank you.
Thank you, Mr. McCallum. Mr. Martin.
My only question is very brief, too. I mean, if the goal is to hit, revenue neutral in 5 years, is there a sunset clause built into this particular increase in Part 2, Section 2? Does it cease to exist after 5 years, or will we have to chase it down and try and have it reduced?
The charge is intended to be an ongoing charge.
Permanent.
So the intent is that it will finance the additional expenditures, the enhancements over time.
So once the scanners are paid for, though, you don't need that.
You'll continue to review the level of the charge to ensure that it's consistent with expenditures. There will be, as I've said, the charge has been adjusted in a number of previous years, and it's always in relation to what are the expenditures over time, and in order to try to keep them in line. And this time, there was a subsequent adjustment in the charge level in order to help finance those additional enhancements and increases in the air traffic security system, in the system and the benefits that are the additional benefits that will be derived.
It's just that taxes seem to go up and stay up. You raise taxes for a specific purpose, and then they never seem to go back down unless we're really vigilant. And did they contemplate a sunset clause, or is there any precedent for increases taxes for a specific fixed period of time and then having them expire?
If you look at the charge itself, it was initially introduced at a level of $12.
I remember.
I'll just talk about the domestic rates, one-way rate. It was $12.
I remember.
That was based on trying to fund levels of security at that point in time. There was some based on revenues. I mean, it's always based on what is the expectations of what will be passenger travel in the future. You're always trying to estimate it based upon a certain level of travel.
Could I ask, though, generally, have you ever heard of a case where a tax increase was for a fixed period?
For a fixed period?
Yes.
Top of my head, have there been specific taxes that have been introduced for some level or something? I'm really not familiar with something.
I guess the income tax was to pay for World War I or something, wasn't it?
Okay.
That's a temporary item.
Okay, let's keep to the part of the bill. Thank you. Monsieur Paet.
Oui,
Yes, talking about theory, I would have liked to talk about section 1643, but anyways. Now, that charge, basically, you say that it's related to an expenditure, but when Mr. Wallace receives his little blue books and looks at the expenditures therein, these are not net expenditures. These are expenditures, period. They're parts of the expenditures. There's no offset with regard to revenue. And revenue could be smaller, equal, or greater, and that wouldn't change anything in terms of expenditures as listed in those blue books, read by Mr. Wallace with great interest. But Mr. Martin indicated very well that this is a tax. It goes into the general revenue. It was calculated based on air traveler security. It has been increased because additional expenditures have to be made, and the tax will be increased, but there is no provision for it to be lowered if the expenditures fall. And yes, in the past, there have already been, both in Canada and Quebec, cases in the 1970s, and I was there at the time, temporary taxes. Unfortunately, they became permanent. I have no other question, Mr. Chair. Perhaps Mr. Wallace could interrupt me, and I don't want that to happen.
I'll just briefly mention, as I was going to start before, the charge has been adjusted over time. It has been adjusted downwards previously. It's based on the level of traffic. If traffic substantially increases, then it's a flat rate charge. If traffic goes up substantially, then the revenues will increase. So, and if expenditures, then it also, as I mentioned to you, there's a constant review of expenditures and revenues over time. And at certain periods of time, I believe on 2 occasions, the charge was adjusted downward. So there is some fluctuations. And that is part of the principle to keep revenues in line with expenditures.
Okay. Okay, well, it looks like we finished 3 of 24 parts today. Colleagues, I do want to thank very much the witnesses for being here, but you may just want to hear, I just want if I can get some very quick direction from committee members. We have 21 parts left of the bill. We have 62 witnesses that have been requested on this bill. There are some time-sensitive issues here that need to be done, at least in the government's view, by June. So I want some quick direction. Do members want to continue with officials on Tuesday, April the 27th? Or the other option is to go to the witnesses, hear from the witnesses starting on Tuesday the 27th, and then bring the officials back after we hear from the witnesses. So there's 2 options there, and I just want some direction from committee members as to which option they would prefer. Mr. Pichetti?
Yeah, through experience, Mr. Chair, normally after hearing from the witnesses, we'll have more questions for the officials, so I would recommend that we have the officials come at the end, because with the fact of having 62 witnesses, like you just stated, I would recommend having the officials coming afterwards.
Okay, thank you. Mr. Martin, please.
Oh, my only observation on the NDP's part is that you could always split the bill. I mean, there's a third option. I mean, you didn't have to stuff in all of these controversial things that have really nothing to do with the budget, like the environmental assessment review, et cetera, et cetera. Break out the time-sensitive parts of this bill, and I think it would pass speedily and leave the controversial stuff for further analysis later on.
I appreciate that, but as you know from reading your O'Brien Bosk book, a committee has to deal with a bill as sent to it by the House of Commons. So we have no choice as a committee other than to deal with the bill in its present form.
The House.
Page set.
Report back.
Okay. Mr. Wallace, please.
Thank you, Mr. Chairman. I'm in the opposite opinion of Mr. Pichetti. Based even on today's meeting on the 3 sections and the quality of the questions, which I agree were quality questions from all sides, I think there's important for us as members to have an education, whether we agree or not with the officials or not, that's here nor there, but for you to ask good quality technical questions first, have them come first, continue with the officials piece, then have witnesses to be able to say, well, this is what the officials are saying, because I'll be frank with you, witnesses will have an opinion on things. They may not have the technical background that we would be able to receive from officials if we went the official route first, then have witnesses, and then go clause by clause. Thank you.
Okay. Thank you. Mr. McCallum?
Yeah, I agree with Mr. Pichetti in terms of having the witnesses at the end. But I also would like to raise for some future meeting, not now, the idea that since we have so many more witnesses than we expected, I don't see why we have to have double meetings every Tuesday and Thursday and 3 hours every Wednesday. I think the deadline we'd set for completing the bill is somewhat artificial. May the 6th, I think we should just have the hearings on the bill extended over a longer period of time.
But we do have our schedule set, so if we extend it over a longer period of time, we're still adding additional meetings. Even if we sit into June on the bill, we're still adding additional meetings.
So why don't we reduce the number of witnesses?
That's a great idea.
Well, I just want direction on this first.
Okay, sorry.
Okay, Monsieur Paillet.
Moi, je suis d'accord.
I agree with my colleague from the Liberal Party. Indeed, we've been asking quality questions. Thank you, Mr. Wallace. It's because we've been reviewing this and we understand tax matters. And I agree with Mr. Pichetti to hear the witnesses, because the witnesses from Quebec and the rest of Canada have to be able to indicate possible changes for the government with regard to certain elements of the bill. And then we can hear again from the departmental officials, whom we salute with great respect.
Okay, I appreciate everyone's comment. I mean, the problem is there's no consensus here. Mr. Hebert, did you want to comment?
Yeah, I was just going to comment on the timing of the meetings. Mr. McCall.
Really, with respect, I just want to have,
okay.
If I can't get direction on this, we can address it this afternoon as well, but there's another committee at 1 o'clock here, so. Okay, well, I'm going to encourage members to speak prior to the meeting this afternoon, and we'll try to get direction to the Department of Finance and other departments as to which way we want to go on April 27th. But I'd prefer to have a consensus of the committee. If we can't, we'll have to have probably a vote this afternoon. Monsieur Carrier.
Oui, Monsieur le Président. Sans parler de...
Mr. Chair, although there's no consensus, I think the majority of us believe that it's better to hear from witnesses who will raise questions that we have not considered, but of some import. So by experience, I think it's better to hear from officials after hearing from witnesses, so we can clarify a number of issues. So perhaps we can vote on that now. And whether there's a consensus or not, I think the three opposition parties are in agreement to hear from the officials at the end of the process.
I have a divisive motion, so I'm going to ask folks to speak between now and the meeting this afternoon, and if we need a vote this afternoon, we'll take it at that time. Okay. Thank you all for being with us here today. Thank you. Meeting adjourned.